Peter Eliades with you. This is Stock Market Cycles Update for the week ending Friday, February 21st. We're recording this, it's currently 10:33 a.m. on Saturday morning, February 22nd. The original George Washington birthday, the real one. Anyway, we're going to show you a couple. We were going to do a long update, go through each one of the projections and whatever. And there have been different opinions from our viewers as to what kind of update they like. Make it really short and concise. Other ones say, no, 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 we want as much as you can give us. So this is going to be on the shorter side, I hope. And we're just going to very quickly go through where we think we are and why, and a couple of the very short-term projections that are important. Okay, the first chart we're looking at is this little mystical trend line on the S&P cash. This is a closing price chart of the S&P 500 cash index. And one of the anchor points, the most important one, is the January of 2018 high. That was important because it was an emotional peak in the market. You can see how the market was going up, 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 up. And finally, from around the fall of 2017, we had this acceleration to the upside. It looked like the market was never going to stop, and we quickly turned around and had a dramatic decline. So this is an emotional top here, and it's an important one psychologically. And what we joined that to were two or three different places, and we'll show you where they were. One of them was obviously a very important place to start it from, and that's the major low in March of 2009. So anchor number one, March of 2009. Anchor number two, January of 2018. Okay, that was the first anchor one and two. The next anchor one and two began here in March of 2012. Okay, and it turned out to be also, from that point on, an external high, because notice, that's that green line. You can hardly see it because it starts to meld into this one that started back in March of 2012. The third one started at the July of 14. Now, all of those were important points, and they were external highs. And look at what happened to all of them. Let's go to the ending here, and let's zoom in on this. All those lines end up being in virtually the same place. Look how close they are. You can hardly distinguish them. And look what happened with the market. By the way, we showed these trend lines before they got up here, not after the fact. So this was an expectation that the market would halt here. This is February 12th. This is February 14th. And this is the final all-time high on Wednesday on February 19th. This is a pretty good, potentially bearish setup here. Could not get through, though, that important trend line, or I should say trend lines. There are three of them that overlay each other right here. So that was important. In the meantime, we also pointed out down below here the RSI readings. This is the momentum peak here at the end of December of 19. We got up to a significantly higher high, but lower RSI readings. And finally, on February 12th, this first high, we got up to just about 70. That's ideal for a top. The next one, we got up to a 68 and a quarter reading. And on Wednesday's all-time high, 67.64 on the RSI. These are classic topping patterns in the RSI. Now, it doesn't tell you how important the top is, but the classic topping patterns. Okay, I wanted to show you that. Also, I want to encourage you to go back and look at the update we did last week. It's dated February 15th for the week ending February 14th. It's a long one, but if you're interested at all in cycles and technical analysis, please go back and look at that update. It's free. There are no charge for these updates. Makes sense, doesn't it? Okay, let's quickly look at a couple of projections here. And actually, I'm only going to show you one projection because there's one that's pretty important on the closing price basis charts. It's the S&P, and well, let me show you two of them. Okay, here's the S&P. This is the important one. On Friday, this light blue line is Friday's close. Look what we did. We gave a closing projection. to the downside to these levels. You can write these down: 3306.35 rounded off, and 3323.85. Okay, so that's what's being called for here on the S&P on a closing basis. It's a pretty high confidence one. When I say pretty high confidence, I'm talking in the area of 75 to 80% in terms of confidence levels. Look at the prior projection. We were commenting on this, and it's one of the reasons why we told you up here as we were meeting the trend line that we're right in the heart of the projection window. Yes, there was more room to the upside, but at this high, you are almost exactly in the center of this projection window. So high confidence projections to the downside, and the only other one we need to look at, I think I made the corresponding mark on this chart as to where that projection would take us. There it is right there, okay? So this dark window here is where that projection was given to, okay? This is the projection that we just showed you. So should we get down here, let's say we do it on Monday in the projection window, that's going to begin to give an even lower projection. You need to go below both these lines, and if you got to the lower end of the projection window, this is Monday, Tuesday, by Wednesday of next week, then you've got yourself an even lower projection. So that's where we stand looking at prices over the weekend. Hopefully this is relatively short. The long one that we did is the really important one that set all this up for this week and called the market virtually perfectly here. We want you to take a look at that one because a lot of the concepts, both technical and cyclical, are in there, and I think you'll enjoy it. Thanks a lot for watching. If you have not subscribed yet, please do so. Bottom right of the screen, little red banner. Click on it. Once you click on that, click on the bell. Notifications will be given to you every time we do an update. Thanks a lot for watching. We'll talk to you next week.